Hi everyone, welcome back to my channel, in the Money Options Trading and Education, and welcome to today's video. In the previous educational video, we talked about derivatives and why investors and traders would want to use them. Those reasons were to gain access to more markets and to engage in speculation, hedging, and arbitrage. Also, derivatives give users the ability to take leverage. We didn't discuss any specific details on futures, forwards, and swaps, and how they compare to options. The next set of educational videos will fill that gap. First, we'll discuss the differences between options and futures. The uses of derivatives mentioned previously, such as speculating, hedging, and arbitrage, apply to futures and options. Therefore, those are the similarities. Let's take a deeper dive into the differences. Recall that an option gives the buyer the right, but not the obligation, to buy or sell 100 shares of the underlying asset at a predetermined price and by a certain date. Since the seller of the option is obligated to deliver or purchase the underlying asset, the seller receives a premium. Options are asymmetric for buyers and sellers. In a futures contract, the holder of the contract is obligated to buy or sell the underlying asset at a predetermined price on a predetermined date. The predetermined price is also known as the forward price. Both sides of the trade are obligated to do something on the expiration date. This is the key difference between options and futures. The expiration date is usually referred to as the settlement or delivery date. Because the trade is symmetric for buyers and sellers, there is no premium for futures contracts. Options and futures are priced differently and trade differently. Equity options, particularly European options, use the Black-Scholes-Merton model for pricing, while futures use the cost of carry model. Each of those topics will span several videos. Futures are often included in the set of Delta One products, meaning the dollar change in the futures contract moves in lockstep with the dollar change in the underlying asset. Options are not Delta One products, meaning the dollar change in the option price is not in lockstep with the dollar change in the underlying asset. This is due to the asymmetric payoff between buyers and sellers. The party that agrees to buy the underlying asset at a later date is said to be long the futures contract, while the party that agrees to sell the underlying asset at a later date is said to be short the futures contract. The long position benefits from a rise in the price of the underlying asset, while the short position benefits from a decrease in the price of the underlying asset. With options, there were four possibilities to consider: long call options, short call options, long put options, and short put options. For futures contracts, there are only long and short positions to keep track of. The underlying asset for futures typically include physical assets like precious metals and oil. They could also include financial assets, such as stocks or ETFs. The quantity of the underlying asset is an integral part of a futures contract and could be different for each underlying asset. For example, one oil future contract is for 1,000 barrels, while one gold future contract is for 100 troy ounces of gold. It is important to check the specifications for each futures contract to understand how many units of the underlying asset are in a contract. For options, it is not ambiguous since each contract is for 100 shares of the underlying asset. There could also be options on futures, which is another topic we'll cover later, but you should know that these exist and trade in the market. A few words on leverage. Similar to options, when you buy a futures contract, the broker will only require a small percentage of the cash needed for the entire purchase. This is known as the initial margin. The same concept also applies to options, but only for option sellers. We'll discuss this in a later video. Since the price of the futures contract will certainly fluctuate, the broker requires another type of margin, called variation margin, which depends on the volatility of the underlying asset and helps to protect the broker in case of big losses over the life of the trade. Both futures and options are marked to market daily, meaning that the trades are revalued daily at their market value, which results in an unrealized gain or loss for each side to the transaction. The unrealized gains and losses are zero-sum, meaning the gains to one side are the equivalent losses to the other side. In terms of market participants, the futures markets caters to commodity producers, consumers, and speculators. Futures contracts can serve as a hedge for buyers and sellers by protecting them from extreme price movements in the underlying commodity. Institutional and retail traders may also participate in the futures market. A key point is that most traders do not intend to acquire the underlying commodity at the settlement date and are likely to unwind their position beforehand. Receiving the underlying commodity is known as physical settlement and can be contrasted to cash settlement, in which only cash is transferred between parties at expiration. There have been some wild stories about physical settlement in the futures market where the underlying commodity was delivered to the long side of the contract after the settlement date. Options also have the concept of physical and cash settlement, but typically physical settlement entails transfer of shares of stock rather than transfer of live stock or crude oil. The concept of settlement is nuanced and will be a topic for a later video. Equity options trade during normal market hours from 9:30 a.m. till 4 p.m. Eastern Standard Time. Futures market hours vary, with some products trading from 8:30 a.m. till 3 p.m. EST and others trading 24 hours a day. Again, the contract specification will provide those details. Today's video was meant to be a brief touch on futures versus options, so we will stop here and continue with current market events tomorrow. If you enjoyed this content, please subscribe and leave a comment for how we can improve these videos.